Okay, so today we're going to try to piece together a pretty complex puzzle here. We've got a whole bunch of recent updates about the economy, traditional markets like stocks, and then the world of cryptocurrency, which always seems to be moving 1,000 miles an hour.
Yeah, always something exciting happening there.
Right. We've got everything from little news snippets and market data to some whispers about what regulators might be thinking next. And it feels like all these things are connected somehow.
You absolutely are.
So, our mission today is to try to connect these seemingly separate pieces for you so you can quickly understand like what's actually happening and why it even matters to you.
And I think what's really fascinating right from the start is that we're going to see how these areas that we're talking about, they're not isolated.
Mm.
A shift in one's like a policy shift or something, it can create ripple effects that you actually feel in a totally seemingly unrelated market. And it might even influence how appealing something like Bitcoin becomes.
Yeah, it's all connected.
It really is.
Okay, so let's just jump right in. One of the first things that caught my eye was all this talk about economic uncertainty. And it seems like a lot of it's swirling around President Trump's recent comments on trade, particularly these auto tariffs. And then he's made some comments about preferring forgiveness over reciprocal tariffs, which just, I don't even know what that means.
Yeah, that's always a tricky area when it gets into these specific policies and how they're implemented.
Right. But it feels like that kind of news could really rattle the markets, get people a little bit on edge.
Yeah, it tends to, whenever you have that potential for a shift in trade policy, it introduces this uncertainty. And that's what really makes businesses and investors kind of
Yeah.
apprehensive, nervous, right? And from the information you shared, it seems like this did have some impact. And I think a good example of that is you see it reflected in the S&P 500, which is hovering right now around that 5,700 to 5,800 level. Yeah. And for our listeners who might not be as familiar, the S&P 500 is basically a key index that represents the performance of 500 of the largest publicly traded companies in the U.S. So it's a pretty good indicator of how the overall market is doing.
Yeah, so it's not just like a general feeling of unease either. We saw Barclays, a major financial institution, right, come out, and they've sharply reduced their target for the S&P 500. I mean, they dropped it from 6,600 all the way down to 5,900.
Yeah.
It's a pretty big cut.
That's a substantial revision.
Yeah.
And it really does suggest that they are anticipating some continued challenges in the stock market.
Yeah, that they're being cautious.
Right, exactly. And I think it brings up an interesting question. How are these big players in the market actually responding to this, like this backdrop of uncertainty?
Right.
Like, what are they actually doing?
Well, and that's what makes it so interesting because on the one hand, you have some people signaling this caution, like we just talked about with Barclays. But then on the other hand, we saw reports that U.S. pension funds are actually making big stock purchases this week. So it's almost like these two opposing forces at work. So are they just looking at this dip in prices as like a buying opportunity? A chance to kind of get in while things are a little bit lower?
Oh, absolutely.
Yeah.
I think that's certainly a strategy, especially for these larger institutions.
Yeah.
They have a long-term investment horizon. So when they see market prices decline, it's an opportunity to grab these valuable assets, potentially at a discount.
So are they just bargain hunting or is there something more strategic going on?
Well, it could also be part of just routine portfolio rebalancing.
Yeah.
They have these target allocations for different types of assets. And if certain asset classes have underperformed because of these current conditions, they might be adjusting their holdings to kind of bring things back in line.
Oh, that makes sense. So it's like a little bit of opportunity and a little bit of strategy all mixed in there.
Exactly.
Okay. But then you look at how consumers are feeling about all of this, and the mood around the job market specifically seems to be pretty pessimistic.
Yeah, that's concerning.
Yeah, we saw this data from the Conference Board, and it shows a jump in the percentage of people who expect fewer jobs in March compared to February. And I don't know if you remember this quote, but it said, Americans are rarely so pessimistic.
Wow. Yeah, that really does highlight a pretty significant disconnect, because if you look at some of the other economic indicators that we have, things actually aren't looking that terrible.
Well, it's confusing because, we did see that U.S. core durable goods orders, they actually rose in February.
Yeah.
And Q4 2024 GDP growth, that came in at 2.3%. So not stellar, but not terrible either.
Right. And just to clarify for anyone listening who might not be familiar with GDP, it's basically the total value of all the goods and services produced in a country. So it's a really key measure of the overall economic health.
Yeah. So it's like we're getting this mixed bag of signals, some of the hard economic data. It looks okay, not really pointing to like an immediate recession or anything. But then you have this underlying worry, and I think that quote really captures it, that people are just really nervous about the future.
And I think a lot of that nervousness is fueled by all this uncertainty that we talked about around trade policies.
Yeah, I think that's a good point.
So the key takeaway here is that we are in a genuine state of economic uncertainty right now. Trade policies are a big part of shaping this environment, and we're seeing a bunch of different reactions from different parts of the market.
Yeah, it's kind of a mess.
Well, it's dynamic, that's for sure.
Okay, so the traditional markets are a little bit of a question mark right now. Let's shift gears and talk about the crypto world, which I feel like always has its own unique brand of volatility.
Oh, absolutely. Never a dull moment in crypto.
Never, but what really jumped out at me from the information you share is that there is a lot of investment and involvement from some pretty established institutions.
Yeah, and that's a really significant trend that we're seeing more and more of. And I think if we kind of connect it back to that economic uncertainty that we were talking about before, it seems like some institutions are starting to look at Bitcoin and other crypto assets as potentially a good alternative or a good way to diversify their portfolios.
Yeah, and we saw a great example of this with GameStop, the video game retailer. They're raising $1.3 billion through bonds, and they're specifically going to use that money to buy Bitcoin.
Wow.
Yeah, that is not messing around.
No, that is a serious commitment.
It feels like a huge vote of confidence in Bitcoin's long-term value.
Absolutely. And it kind of echoes what we've seen from other companies like MicroStrategy, who have also been very vocal about their Bitcoin investments.
Yeah, and I think what's interesting about this is it's not just about maybe trying to make a quick profit off of Bitcoin's price movements. It's about seeing it as a legitimate store of value, like a digital gold almost.
Exactly. And for a publicly traded company like GameStop to be making such a substantial allocation to Bitcoin,
Mhm.
I think it does signal a growing acceptance. They're seeing it as a potential long-term asset.
Yeah.
And we also saw the blockchain group in France. They made a significant purchase of Bitcoin as well, adding to their existing holdings.
This is becoming more mainstream.
It really is. These aren't just small experimental investments anymore. They're becoming a more meaningful part of these corporate financial strategies on a global scale.
Yeah, that's interesting. And it's not just about buying Bitcoin directly either. We saw that Fidelity, a huge name in traditional finance, they're getting even deeper into crypto.
Yeah, Fidelity is really interesting because they already offer Bitcoin ETFs, but now they're exploring the possibility of launching their own stablecoin.
So for listeners who aren't familiar with stablecoins, can you just quickly explain what those are?
Sure. So a stablecoin is basically a type of cryptocurrency that's designed to maintain a stable value. And that's usually by pegging it to another asset like the US dollar.
So it's like a less volatile way to get into crypto.
Exactly. And right now, some of the biggest stablecoins are Tether and Circle. But if Fidelity comes out with their own stablecoin, that could really shake things up.
Yeah, that would be a big deal because Fidelity is such a trusted name in finance. Having them issue a stablecoin could really make it easier for both institutions and individuals to move money between the crypto world and the traditional financial system.
Oh, absolutely. I think it could significantly enhance that integration that we're starting to see between those two worlds.
And on top of the stablecoin news, Fidelity has also filed for a Solana spot ETF.
Oh, wow. Yeah, that's another big development because Solana is one of the other major cryptocurrencies out there, and an ETF would make it a lot easier for people to invest in it through traditional brokerage accounts.
So it's like Solana is stepping up to the big leagues, alongside Bitcoin and Ethereum.
Exactly, and it's not just Fidelity that's doing this. We're seeing a bunch of other companies like Grayscale also filing for various crypto ETFs.
Yeah, it feels like there's this race to bring crypto to the masses.
Definitely a lot of momentum there, and it's not just about the big names either. Grayscale, they recently updated their list of top 20 altcoins, and they added some newer assets like Hyperliquid and Jito.
Now, I've never heard of this.
Yeah, there's some of the up-and-comers, and I think it just shows that investors are starting to get more comfortable exploring different parts of the cryptocurrency ecosystem.
So it's maturing as a market.
I think so. People looking for growth opportunities and diversification,
Yeah.
and they're not just sticking to Bitcoin and Ethereum anymore.
Yeah, that's interesting. But it's important to point out that we're not seeing all positive signals here.
Right.
When we look at the actual flows of money into these crypto ETFs, it's a bit of a mixed bag.
That's a good point.
We saw that Bitcoin ETFs actually had weaker cash inflows recently, and Ethereum ETFs had negative flows, which means more money was flowing out than in.
Yeah, that's definitely something to keep an eye on because it does seem to contradict all this talk about growing institutional adoption.
Right.
So I think what it really reflects is the inherent volatility of the crypto market. Even with all this long-term interest from institutions, crypto prices can still swing wildly, and that can make some investors cautious in the short term.
Yeah, it's a roller coaster ride.
For sure.
And speaking of Ethereum, there's some exciting news about the upcoming Pectra upgrade.
Oh, yeah, this is a big one.
Yeah, can you tell us a little bit about that?
So the Pectra upgrade, it's basically combining two previous updates that were planned,
Mm-hmm.
the Prague and Electra updates, and the main goal here is to make the Ethereum network more scalable and to improve the efficiency of staking.
Okay, so can you break that down for us?
Sure, so scalability just means making the network able to handle more transactions at once, kind of like adding more lanes to a highway so it can handle more traffic.
Okay.
And staking is basically how people participate in securing the Ethereum network and earning rewards for doing so.
Hmm.
So improving staking efficiency can make it easier and more rewarding for people to get involved, and that ultimately could lead to a more decentralized network.
So this upgrade is not just about making things faster, it's about making the whole network stronger.
Exactly. It's about improving the foundation of Ethereum for the long term.
Cool. All right. So the key takeaway here with crypto is that there's a lot of interest from big institutions, and it's not just about Bitcoin anymore. We're seeing a broader range of crypto assets gaining traction, but we also have to remember that the market can be really volatile, and we're still waiting to see how some of these big bets like ETFs actually play out in the long run.
Absolutely. It's a dynamic and ever-evolving space.
Okay, so we've talked about the traditional markets and the wild world of crypto, but what about the people who are setting the rules? What's happening on the regulatory front? And also, I noticed some interesting developments related to sustainability in the information you shared.
Yeah, those are both really crucial areas because regulation and sustainability, they're going to play a huge role in shaping the future of crypto.
Okay, so let's start with regulation. We saw that SEC Commissioner Hester Pierce, she spoke at a Bitcoin conference in Las Vegas, and she's known for being pretty supportive of the crypto industry.
Yeah, she's often seen as a pro-crypto voice within the SEC, so it's definitely a positive sign that she's engaging with a community like this.
Yeah, it feels like a step in the right direction, having regulators who are willing to actually learn about and understand this space.
Absolutely, and it's not just about individual commissioners. Either the SEC Crypto Task Force, they're actually scheduled to host 4 more discussions in April and May of 2025, and they're going to be focused on some key areas like trading platforms, custody solutions for digital assets, and the tokenization of assets.
Okay.
So this suggests that they're really trying to, understand the industry and figure out how to provide clearer guidance and regulations.
So it's not about cracking down on crypto, it's about figuring out how to make it work within the existing system.
Exactly. I think that's the direction they're moving in.
And it's not just about the current regulators either. There was some talk about Paul Atkins, who's a potential future head of the SEC, and he actually owns shares in a few companies that are involved in the crypto space.
Oh, interesting.
Yeah. So that raises the possibility that we could see a more favorable regulatory environment for crypto if he does become the head of the SEC.
It's certainly a possibility, and I think it highlights a really important point. The background and experiences of the people who are in these positions of power.
Mm-hmm.
It can really influence the direction of policy.
Yeah. It's not just about following the rules, it's about who's making the rules.
Exactly.
And then on the policy front, we saw this interesting proposal coming out of North Carolina.
Oh, yeah, the pension fund allocation.
Yeah, so they're proposing to allocate a small percentage of their state pension fund to cryptocurrency investments.
Wow, that's a bold move.
It is. It's a state level decision that could have some pretty big implications. If other states start to follow their lead, it could really signal that crypto is becoming more widely accepted as a legitimate asset class, even for those really conservative institutional investors.
Absolutely. And I think it's interesting to contrast this with the economic situation in the UK,
Hmm.
where they're having to announce spending cuts and inflation is still a concern.
Right, so it's a different economic context.
Exactly. And it shows how those different contexts can really shape how regulators and policymakers approach these new technologies.
Right. Okay, let's talk about sustainability, because that was another big theme in the information you shared.
Yeah, and I think it's a really important one because the environmental impact of cryptocurrency has
Yeah.
been a major concern for a lot of people.
Yeah, for sure. But the story about gridless compute that really caught my eye.
Oh, yeah, the hydroelectric Bitcoin mining operation in Zambia.
Yeah, they were actually praised by the BBC for using clean energy and benefiting the local community.
Yeah, it's a fantastic example of how Bitcoin mining can be done sustainably,
Yeah.
using renewable energy sources and actually
Yeah.
contributing to the local economy.
And I think it's important to highlight these kinds of stories because it helps to change the narrative around crypto and sustainability.
Yeah.
It shows that it's not all about these energy-intensive mining farms that are damaging the environment.
Exactly. There are innovative solutions being developed and implemented, and that's really encouraging to see.
Yeah. All right. So the big takeaway here is that we're seeing regulators getting more involved in the crypto space. There's the potential for more crypto-friendly leadership in those regulatory bodies, and we're seeing some really cool examples of sustainable practices within the industry.
It's all evolving very quickly.
Okay, so we've covered a lot of ground here. We talked about economic uncertainties in traditional markets, growing institutional adoption of crypto, and then the regulatory and sustainability landscapes within the crypto world. So let's try to tie this all together for our listeners.
Yeah, let's bring it all home.
How do all these seemingly separate pieces actually connect?
So if we look at the big picture, that economic uncertainty that we talked about at the beginning, driven by those potential tariffs and other factors,
Yeah.
I think it's actually contributing to the increased interest that we're seeing in these alternative assets like cryptocurrency.
So it's like a flight to safety.
It's not necessarily safety, but it's more like diversification.
Yeah.
Investors are looking for assets that might not be directly correlated with the stock market or other traditional investments.
So if the stock market tanks, maybe Bitcoin goes up.
Exactly. Or maybe it
Yeah.
doesn't. But the point is that it's not tied to those same economic forces.
Hmm.
So it can provide a hedge against potential losses.
Oh, I see. So it's like a way to spread out your risk.
Precisely. And we saw this with GameStop. They're clearly looking for ways to protect their capital, and they're betting on Bitcoin as one potential avenue.
And maybe that's part of what's going on with those pension funds, too.
It's very possible.
Mhm.
They have a responsibility to manage these large pools of money, and they're always looking for the best ways to generate returns and manage risk.
Right. Okay. And then you layer on top of this the increasing regulatory clarity, even if it's still a work in progress, and the continued involvement from these big institutions. It feels like it could all lead to a more stable and mature cryptocurrency market.
I think so. The more mainstream players that come into the space, the more legitimacy it gains and the less volatile it's likely to be over the long term.
Yeah. And then, of course, we can't forget about sustainability. That's a huge factor in the long-term viability of crypto. Absolutely. Investors and regulators, they're all paying attention to the environmental impact of crypto mining. So those sustainable practices that we talked about, they're going to be crucial for gaining wider acceptance.
Yeah, it's not just about making money, it's about doing it in a responsible way.
Exactly.
So it feels like we're in this really interesting transition period right now where the lines between traditional finance and the crypto world are starting to blur.
Yeah, it's like they're merging together in some ways.
Yeah, and I think the combination of clearer regulations and continued involvement from these large institutions, it could really drive the next phase of growth in the crypto space.
I agree. There's a lot of potential there.
But we also have to acknowledge that there's still a lot of uncertainty in the broader economy, and that's going to continue to impact both traditional markets and the crypto world.
Yeah, it's all interconnected. All right, so to sum it all up for our listeners today, we explored how traditional economic policies can create uncertainty and how that can actually fuel interest in alternative assets like cryptocurrency. We saw some really compelling examples of how big institutions are getting involved in crypto, and it's not just about buying Bitcoin anymore. It's about a whole range of activities and investments.
Right. And we also talked about how the regulatory landscape is evolving and the encouraging progress that's being made in sustainable crypto mining.
Yeah, so maybe some of the aha moments for our listeners today were things like that surprisingly strong pessimism around the job market, even though some of the other economic data looks okay, or the sheer scale of the institutional investment that's going into Bitcoin right now, even with all the volatility.
Or the fact that regulators are actually having these proactive discussions about crypto and trying to figure out how to create a framework for it.
Right, it's not just about banning it anymore, it's about figuring out how to make it work. And so on that note, here's a final thought for our listeners to chew on, given all this interconnectedness that we've been talking about. How might future economic policies need to fundamentally change to really account for these new digital assets and the growing impact that they're having on global markets and individual investors?
That's a great question.
It's something to think about as you continue to follow these developments, because this is a story that's far from over.
Not even close.
All right, thanks for taking this deep dive with us.
My pleasure.
We'll catch you next time.